Good afternoon friends. In this Income Tax Bi-Weekly Bulletin, we'll discuss on the updates and amendments in income tax in the last 2 weeks of October 25. We'll discuss on the extension of tax audit and transfer pricing dates and what is not extended. We'll discuss on why entertainment industry is in focus of the income tax department. What happens in case you do not file your returns or don't pay your taxes? Can there be a prosecution initiated against you as a taxpayer by the income tax department in such cases? We'll discuss on claiming of deduction for expenditure in case of receipt of partner's salary by the partner in its personal file. Can the income tax department only act on the GST department's information on fake invoicing? Also, we'll discuss on how and why your rectification request to the AO under section 154 may be further speeded up and fastened going forward. So let's get started. First up, the biggest news is that income tax returns date have been extended till 10th of December 2025 and the tax audit dates have been extended till 10th of November 2025 from 31st of October. However, for transfer pricing cases, today, that is 31st of October 25, is the last date to file Form 3CEB, that is the transfer pricing audit report. Also for transfer pricing cases, 30th November 2025 is the last date for filing the income tax returns. Which brings us to the next question. What happens in case you do not file your income tax returns on due date and you have a tax payable? In such cases, a prosecution can be initiated under section 276cc or 276c. In case you have a tax payable and do not file or file your income tax returns but do not pay your taxes, in such a case, in the case of Vilas Baban Rao Kaloke, the Honorable Bombay High Court has ruled that only in case where there is an intent of evasion, where finally the taxes are not paid, can prosecution be initiated, where after filing the return the taxpayer has paid off its taxes with interest, then the prosecution can be relaxed. But it is important to note for the taxpayers that return filing and payment of taxes is important in today's era. Next, your rectification request, which after 2024 amendment on the income tax portal you filed to the attention of the AO, would now be speeded up, as the jurisdiction for such rectification orders under section 154 has now been through notification been granted to the CPC, and the CIT CPC can further delegate such powers of issuing rectification orders for rectifying the refund amounts, the interest under 244A, for rectifying the TDS or TCS credits which are not made available to the taxpayers in the 143(1) etc., or on any tax interest etc. So now it seems that the rectification request, in case any which were filed and which were not actioned, may be speeded up, as CPC would be doing it on behalf of the AOs. Also, simultaneously the CPC has been given the power to issue the demands under section 156. For entertainment industry, that is the film industry etc., they have to file Form 52A to claim the pre-operative expenditure under section 35D. Thereafter, under Rule 9A and Rule 9B, the cost of production and cost of distribution of the films needs to be verified and recorded by the officers. It is seen that many of the times the Form 52A is not filed correctly by the entertainment industry, and which in case not done correctly can lead to a penalty under section 272A. Now the income tax department has issued a communication and advisory for the AOs to be careful on this front. So entertainment industry, film industry, taxpayers should be careful while filing their Form 52 capital A. The GST department, if it invokes certain proceedings against the taxpayers for fake invoicing, etc., it gets reflected on the inside portal of the income tax department. The question is that whether the income tax department can just act on this information and issue notices under section 148A to the suppliers and the customers of such a taxpayers. Answer is no. It was held by the Gujarat High Court in the case of Vasuki Global that the income tax department should conduct its own inquiry before issuing the notices on the basis of information from the GST department. By the way, in this case of Vasuki Global, the income tax department also faced an embarrassment where actually there was a misunderstanding and the information provided by the GST department on fake invoicing case was not correct. So, income tax proceedings, we see a lot of proceedings are there by the income tax department on merely the information of the GST department. That should not be the case, and income tax department should conduct its own inquiry. Partners earn salary, etc. from their partnership firms. Now, this salary earned by the partners from the partnership firms in their personal files under section 28 clause 5 is treated under the head income from business and profession. The question is that whether the partners can claim deduction for expenditure expended for earning this partner's salary. The answer was in affirmative by the Honorable ITAD Delhi in the case of Atul Kumar Gupta. It was even earlier held by the Honorable Supreme Court in the case of Ramnik Lal Kothari that such expenditure expended by the partners for earning their salary from the partnership firm can be claimed by the partners against such income in their personal files. The same was reaffirmed by the ITAT Delhi. Now, many multinational companies, they take works contract, turnkey contracts in India, building the metro station, it is done by the foreign companies, exploration of oil, etc., or helping in that, the turnkey projects are taken up by multinational companies in India by forming a subsidiary in India. Now, after these turnkey projects are closed, then they keep on trying, may not get business. During this period, they do not have a business income, but they keep their subsidiary alive and claim the administrative expenses under section 37 or depreciation under section 32. The question is, can this period of 3, 4, 5 years where there is no business income be considered as a discontinued business operation, and can these expenses under section 37 and 32 for depreciation in the Income Tax Act be disallowed? The Honorable Supreme Court has held in the case of Pride Foramer Case that such expenditure cannot be disallowed even during the phase of lull in the business. It is not a phase of discontinuance, but it is a phase of lull in the business. The expenditure under section 37 or 32 is incurred for the purpose of business and not for the purpose of earning profit, and that is what is required under section 37 and section 32. So, this expenditure is allowable under Income Tax Act. The Income Tax Act 2025 also reaffirms and keeps the same position. In the Income Tax Act 25, section 37 for general deduction becomes section 34 and section 32 for depreciation becomes section 33, and the same position is maintained even in Income Tax Act 2025. So, wherever we think that in case precedents in Income Tax Act 61 may not be applicable in 25, at least this precedent judgment of the Honorable Supreme Court in the case of Pride Foramer will continue to prevail in Income Tax Act 25 regime also. So, friends, these are the updates in income tax over the last 2 weeks. We will keep on bringing this bi-weekly income tax updates bulletin. Thank you very much for watching. Do like, share and subscribe to this channel. Thank you very much.